Hi traders, thanks for stopping by thetradinganalyst.com. This is Taylor and we're going to take a look at a bunch of charts here and I'm going to give my analysis and my thought process, and you're going to walk away from this video with some newfound knowledge on technical analysis as well as hopefully some profitable trade ideas based off of this free analysis video we're about to give you right now. But first, if you're not already a member at thetradinganalyst.com, go ahead and give us a visit on the home page of the website and get to know us a little bit better. If you like these free videos and analysis we give to you on a daily basis, it's really nothing in comparison to the membership you get once you sign up with the premium membership. Once you sign up with the premium membership, you're going to get instant access to the profitable trade alerts that our current members are getting and loving on a daily and weekly basis. It's a great opportunity and we'd love to help you start making winning trades in the market. Alright, so let's take a look at the charts here. We're going to start off with Chipotle, and Chipotle has been dead money for quite some time, as you can see, in a downtrend for, what is this, about 3 months, and for the last couple months we've been trading sideways here. We have been mentioning that we liked Chipotle for a long, and congrats if you've been following along because it's worked out very, very nicely. And today, on last Friday, right here, we got confirmation of that, and we got confirmation that most likely Chipotle is going to head even higher than where it's at right now, and I'm going to go over exactly why. So for one, we broke over this downtrend line. You can see it started here, rejection there, here's a rejection, kind of came into it right here as a rejection before eventually breaking over it right there on Friday. We also broke over the 50-day moving average, which is the red line. You see that right there. It's the first time we've closed over the 50-day moving average since right here. That was the last close early June. So it's been about, 5 months or so that we've been below the 50-day moving average. So Chipotle looks like it wants to bounce. The other reason that I like Chipotle, that I continue to like Chipotle for along here, is because of this volume that we're seeing. All right, we saw probably about double the average volume that we see normally. The previous day right here was 775,000 shares, and we traded 2.1 million shares right now. So there's more than double the volume right here that we saw on Friday. So another thing too is not only are we over this resistance, but we traded sideways here for about, about a month and a half right here, trading sideways. So we built up a lot of energy for a move higher. So that's what we're looking for on Chipotle, is a move higher. First target is going to be up here at about 340. You can see there's a little shelf of resistance right here based off of that previous support. So first target, 340. We'll see if we get any more volume into it or anything like that. There's not a ton of resistance once we break 340. So we'll see if that happens. And then moving forward, if we do end up bouncing like it looks like we are going to, and into about $400, to me, $400 is a great short up there. So obviously that's a long ways away. I'm going to draw a Fibonacci retracement level from these highs over here and see if it can give us some kind of a resistance point that we can work with as well. So I'm drawing it from the highs up there to the lows down there, and we've got the 61.8, which is right up here just above $400 at about 410. So yeah, this is perfect. We've got a lot of resistance. You can see this volume by price bar up here. Okay, that's huge volume by price bar. The red and the green bar right there is showing there's a lot of resistance up there. So if Chipotle gets up there, it's going to be a nice short. But right now, it's going to look like a really nice long for now. So that's what we want to focus on for now, is that Chipotle looks like a great long from this point. So let's see what happens, but definitely like Chipotle for a long. The next one we're going to take a look at is Snapchat. No, not Snapchat, Snapchat. All right, so Snapchat, here you can see breaking over this major resistance right here. We had this point of trend line started here, got resistance here, resistance there, resistance there. Here we are squeezing against it and then breaking over it here with some heavy volume. So we've got 2 days with some heavy volume right here. 1, 2, as we broke over this level of resistance. I do like Snapchat for a long. I think it's going to head higher. If we head down to about 1540, that's a level of support based off of this previous resistance right there. You can clearly see it knocking into that level right there. So definitely want to be focusing on about 1540-ish for a bounce zone. As far as targets, we hit the first target here near $17. The next major resistance is up here just below $20. You can see we got a bounce right there, there, kind of broke it right here. So this is clearly a level of resistance right here because it was previously support. So support turns into resistance when you go below it. So that's a level of resistance. I think that if we end up going up there, that is just like Chipotle. We've got another short opportunity. So you don't want to be biased on a stock and married to a certain direction. I honestly don't care which direction any stock heads, and that's kind of how you have to be if you want to trade successfully in the markets. I don't care about Snapchat. I don't care about Chipotle. All I care about is which direction they're going to head in so that I can make money in it. So right now I think Snapchat is going to be headed higher from here based off of those reasons. Next one we're going to take a look at is AAOI. And AAOI, this is one that we warned you about before earnings. We mentioned that it did not look good and that it was likely going to head lower. So just to review why we thought this, okay? Why we thought this. We thought this because, A, we have this trend line break. Here it started right here, got a bounce here, and then we broke it right here, retested it, got rejected right here, and then as you can see, we also have the 50-day moving average. I pointed this out in the last video I did on this stock. We had this 50-day moving average, which was declining. So not only were we below this 50-day moving average, but the 50-day moving average was declining as well. So another thing too is that we had this big gap down off of earnings right here. Heavy volume. I believe this is the heaviest volume day we saw on this stock almost ever. So, and that was a huge gap down. So that was another warning sign. And after that gap down, we didn't really make any kind of attempt to make a move higher. We stayed below this price point right here. So usually you want to see some kind of a bounce back before the next earnings. Otherwise, it looks like this. We just kind of traded sideways and down a little bit, and we never really recovered from this move, which really had me bearish on this stock, like we prepared you on this video that we did last time for this stock. So hopefully you listened and followed along. This is really simple stuff that anyone can apply. The next one we're going to take a look at is ACIA. And ACIA is at an interesting juncture here on the chart. So clearly this stock is not great. Okay, overall the stock is not performing great. We've been in a downtrend since August of 2016. So more than a year we've been in a downtrend, and even though we've been heading up here, right here recently, this is still a downtrend. We moved from all the way up here, $130, and we just barely moved, $6 from $40 to $46. So really, this is just a blip so far. Doesn't mean we can't head higher yet, but so far this is just a blip on the radar of the downtrend. So what I want to point out is we've got this this uptrend line right here. Clearly, this stock is using this trend line. You can see it bounced here, right there, exactly on it, right there, here, here, and here we are several days in a row just hanging out right against it. We've also got this little mini support. You can see it started from the low of that day, lows of these days, and just recently here from Friday and Thursday of last week, right there. And clearly it's reacting to this trend line, to this level. We've also got the 50-day moving average, which it has used as a level of support, the red line right here, which we are currently right at right now. We're maybe about a few cents below it, but to me, that's not enough to consider it any kind of a break. So what I'm trying to say here is that this stock, ACIA, needs to hold this level, and if it breaks below this level right here, which is about $46 to $45.50, if it breaks those levels, to me this is going to look like a good short. All right, a good short if that happens. Until then, this is still a good support, but the thing that has me thinking it will break potentially is we've got MACD trending lower, and we've got a bear cross right here on MACD. So not a lot, plus the fact that we're still in a major downtrend. All right, we're still in a major downtrend, and trends are more likely to continue than to change. So we really got to, ACIA has to prove itself. Okay, the burden of proof is on ACIA to prove itself that this isn't just a bear flag. Okay, because that's what it totally could be right now. So depending on if it bounces here, I want to see a bounce over the highs of Thursday and Friday. So if we get that, if we get a bounce over Thursday and Friday's high, so that's Thursday high 46.57, Friday's high 46.59, so about 46.60. If we get a break over that, to me it's a good long up to about $50. All right, but if we break the lows of last week, to me that's a good short, and I think we'd come down here to maybe about this level down here at about $43. So $43 would be that target. I'll go ahead and I'll draw that right there. So that's kind of the target that I'd be looking for on this stock, is about $43, because you can clearly see it's a support, and it was previous resistance here, right there. So this is a nice level here to use on ACIA. So we'll see what happens, but definitely be watching this stock early next week, because it's going to be very important, especially on this level. The next one we're going to take a look at is Twitter. Twitter, this is one that we liked for a long here, and as you can see, it's heading up very nicely. So congrats if you've been following along. Just to kind of review, we liked it for a long as we were uptrending here into this resistance, and we got confirmation of that with that nice volume that came in on Thursday, and then on Friday we had a nice higher close, higher high, and a higher low made. We're targeting up here near about 1960. So really nice action. This is the difference between a stock that, comparing it to AAOI and Twitter. We had this big gap down here on heavy volume right there. And then we headed lower, but look at this. We headed higher since then, came back, retraced to that same level, headed higher. So this is a healthy bounce, all right, that we saw on Twitter. We did not see that on AAOI. So just to kind of compare the difference between, two stocks that did very similar things, big gap down on big volume on earnings, and this one recovered nicely, and AAOI kind of just trended down since then. So that's kind of the difference that you want to look for. The next one is Gopro, and Gopro, really don't think this stock looks very healthy at all. I think it has lower to go. It could, I don't have a great read on it right here where we're at right now. As far as new positions, I don't really like initiating a new position right here. If you're short, great, because I do think that if you're already short, I mean, from up here, I do think that's a great position to be in, because overall I think this stock is heading lower, just because we had this resistance here, there, right here, and we broke over that resistance right there. It looked like a nice breakout was going to happen, broke over it right here, and then we dumped back below it. So that made this a false breakout, and false breakouts lead to swift moves in the opposite direction, because this is clearly a rejection of these prices up here. Doesn't matter why. All that matters is that this stock did not want to stay up at these levels. Okay, so that's what you want to focus on. The next one we're going to take a look at is Priceline. And Priceline acting really well here. We broke over this gap down right here on earnings. You can see that. And now we're using it as a level of support. You can clearly see it reacting to it right there. And on Friday, we got a really nice gap up over the previous 2 days' highs. I think that's a really good sign. You know, if you've been following along in these videos we've done on Priceline, we've liked Priceline for a bounce off of this 1908 level, based off of this resistance level. It was formerly resistance, but now it's support, and you can clearly see it reacting to that level here on that day, and then we broke over it. But look at where the close was of this day, and then the open was of this day, right at this level, and then we bounced right off of that level right here and headed higher since then. So congrats if you've been following along. I think it's going to fill this gap up here. As far as earnings goes, I hate playing earnings unless I have a really, really good read on it, and I don't have on AAOI. I had a good read on it. I thought it was going to head lower, but on Priceline right here, to me, it's a no touch through earnings. But until earnings happens, I do think it's going to head higher, and I like it for higher. But once earnings happens, all bets are off, and it could go really either way. I do lean bullish on it. I do think it has more of a chance to head higher after earnings, but not enough to really say anything with confidence on Priceline. So thank you for stopping by and watching the video, everyone. Hopefully you enjoyed that and learned a thing or two. If you're not already a member at TheTradingAnalyst.com, visit us on the homepage, get to know us better, and then join the premium membership. As soon as you join the premium membership, you're going to get instant access to the profitable trade alerts that our current members are getting on a daily and weekly basis. It's a great opportunity, and we'd love to help you start making winning trades in the market.